So you're thinking about reverse mortgage. Or maybe your parents are. The pitch sounds simple. Unlock cash from your home, no monthly payment, stay put for life. But what often gets missed when you sign those papers? The real risk and the fine print aren't always obvious. Let's break down what you need to know to protect your home, your finances, and your family. Hello everyone, my name is Lei Villar-Cisneros. I'm a realtor and mortgage agent licensed in the province of Ontario, serving Toronto and the Greater Toronto Area in Canada. What is reverse mortgage? A reverse mortgage is a loan for Canadians 55 and up, lets you access 55% of your home's value as tax-free cash. You keep your home and there are no monthly payments. The loan plus interest is repaid when you move, sell, or pass away. Who offers reverse mortgages? In Canada, only federally regulated lenders like Home Equity Bank and Equitable Bank offers these products. That means strong consumer protection, clear rules, and oversight by government regulators. In other words, it's safe. So how does it work? Eligibility, you and your spouse has to be at least age 55. If one of you is younger, you do not qualify. If there are other people on the title who are less than 55, none of you will qualify. How do you receive funds? You can choose a lump sum, regular payments, or a mix. There are no monthly payments, so nothing is due until you move, sell, or pass away. Repayment terms, the loan and interest are paid from the sale. Any leftover equity goes to you or your heirs. What if you already have a mortgage or HELOC or a second mortgage? Here's the rule. Technically, the funds from your reverse mortgage are first used to clear these debts. So if you have a second mortgage on it, it has to be paid first. Only what's left over comes to you as cash or regular payments. If your current mortgage or HELOC balance is too high, you may not qualify for a reverse mortgage. Or you might get less cash than you expect. So always review your balance and talk to your lender before applying. This step can make or break your reverse mortgage plan. How do you get a reverse mortgage? You can talk to a mortgage broker or the lender. How much money can you borrow? So how much money can you actually take out? In Canada, the older you are, the more you can borrow from your home's value. At age 55, you might qualify for about 15 to 20% of your home's appraised value. By age 65, this could rise to 30 to 35%. At age 75 or older, you could access 40 to 55% depending on your lender and your home's details. So you don't actually get the whole 55% right away. Use online calculators from the lender's website. Just enter your age, your spouse's age, your home's value, and location for a personal estimate. The calculation is always based on the age of the youngest borrower on title. Now let's go to the myths about reverse mortgages. Myth number 1, the bank owns your home. Fact, you stay as the legal owner. The lender only registers a lien like any other mortgage. Myth number 2, you lose all your equity. Fact, you can only borrow up to 55% of your equity. So most Canadians still have equity left, especially if home values rise. There is no negative equity guarantee. Even if your home's value drops, you or your heirs never owe more than the fair market value at sale. So let's say the home value is less when you pass away,
Move, or when you sell the home and the money is less than you owe, you and your heirs don't have to pay the difference.
Myth number 3, you can be kicked out if you miss payments. Fact, there's no monthly payments required. Just keep up with property taxes, insurance, and maintenance of your home. Myth number 4. Reverse mortgages are only for desperate people. Fact, many use them to supplement income, fund renovations, help family, or avoid selling investment in a downturn. Myth number 5, you'll pay taxes on the money. Fact, the funds are tax-free and don't affect OAS or GIS. But here's what's often missed. If you take a large sum and invest it and keep it in a savings account, it could affect your eligibility for certain provincial income tested benefits or subsidies, like some drug plans, property tax grants, or rent geared to income housing. Always check how a reverse mortgage payout could impact your specific provincial programs. So what are the ways that you could use reverse mortgage? For example, let's look at some real life scenarios. Mary, 70, in Toronto, uses a reverse mortgage to help grandkids with university and travel while staying in their home. John and Linda, ages 65, in Vancouver, tap home equity to cover expenses during a market downturn, letting investments recover. Raj, age 75, lives in Calgary, renovates for accessibility. Sandra, on the other hand, is age 68, lives in Ottawa, helps her daughter buy a home without selling her own. So, what's the catch? Interest rates are higher than traditional mortgage. There's a high upfront cost for appraisal, legal, and administrative fees often rolled into the loan. It's also compounding interest. In Canada, interest is compounded semi-annually, so your loan balance grows faster over time. And also, this is very important, you must keep up with taxes, insurance, and maintenance. And if you decide to pay early repayment can cost you more. Always ask for details. Let's look at some ways that reverse mortgage could go wrong. Let's say the contractor trap. Funds lost to a scam contractor, couldn't keep up with the taxes, and eventually lost the home. Health crisis forced to move to a long-term care home. Remember, the trigger is if you move, sell, or pass away. So, for any reason you did not stay in your home for the 12 months, you will have to repay the full amount. Because of this scenario, the homeowner had to go move to a nursing home, and thus it has to force a sale on the property. On a downturn market, the homeowner will lose a lot of money, or if they decided they wanted to keep their house, but because of the circumstances, they have to sell quickly, losing further opportunities. Additionally, there's also the shrinking inheritance. So didn't realize both owners had to be 55 plus. So after a spouse passed, the loan became due, leaving little for heirs. Also, the forgotten fees. Upfront and ongoing costs added up, leaving less equity than expected. So what are the lessons that we could learn from reverse mortgage? Always research, plan for the unexpected, and get independent legal and financial advice. There are key protections and legal requirements when you apply for a reverse mortgage. An independent legal advice is required by law before you sign a reverse mortgage contract. This protects you and ensures you understand all terms and risks. If you're away from your home for more than 12 months, for example, due to a move to long-term care facility, the lender can require repayment even if you didn't plan to sell. If your spouse isn't on title and is under 55, he could be forced to repay the loan or move if you pass away. Make sure all owners are included and meet the age requirement. What are the alternative ways to consider when you are thinking of a reverse mortgage? A home equity line of credit may offer lower rates and more flexibility but requires monthly payments and good credit. Another option is to downsize. sell your home and buy something smaller to free up cash. Traditional refinancing might be possible if you can qualify and handle payments. But if you have a large equity on your home, you could sell it, and then whatever's left on the equity, you can buy a smaller home. Always compare your options before deciding. If you're thinking that reverse mortgage is for you, contact a federally regulated lender like Home Equity Bank for a personalized estimate. Or you can contact your mortgage broker for details. Review the Government of Canada official reverse mortgage guide for up-to-date rules and consumer protection. Ask questions, get independent legal advice, and read the fine print before you sign. Mortgages are a flexible, regulated tool for retirement, but they're not for everyone. Protect yourself, your home, and your family by understanding every detail before you sign. If you found this helpful, like, subscribe, and drop your questions below. My name is Lei Villar-Cisneros, and this is your guide to making smarter decisions about your home and future. See you next time on Toronto Living.